Hello and welcome. You tuned into Market Cafe. I'm Ankita Saxena with me, Shrishti Sharma, and it is a fresh start to the week. And before we get started with telling you all the cues that you need to watch out for before the start of D Street, let's take stock of how the global markets moved. The GIFT Nifty, as we see, shows an implied start of a downtick of almost more than 0.5%. So cuts coming across. In fact, even in the US market, as we can see, a slew of comments by Donald Trump that weighed in on the markets. In fact, the S&P 500 ended Friday just below the flat line and posted a losing week as traders weighed the latest comments made by President Donald Trump related to Federal Reserve and the geopolitics. Now, the broader market index slipped 0.06%, and the Nasdaq Composite 2 inched down 0.06% to settle in at 23,515. The Dow Jones Industrial Average fell 83 points, so 0.1% downtick coming in on Dow Jones as well. The three major averages hit their session lows after Trump delivered remarks in the White House on Friday, in which the president said that he'd rather have National Economic Council Director Kevin Hassett stay in his current role and that he might not be chosen to become the next Fed chair. And besides that, there were a couple of other news flows coming in as far as the tariffs are also concerned, tariffs in the NATO countries that will be implemented from the 1st of February. So a couple of commentary that came out of US President Donald Trump that really weighed on down the markets, and US markets ended with cuts on Friday. And for Nifty as well, the implied start shows a cut of almost 0.6%.
All right, so that's about the US markets as of now. Even US futures are seen to be declining almost 300 points. But yes, of course, with respect to the commodity world, interesting actions over there because the safe haven demand is seen to be coming back with respect to the gold as well as silver prices. Gold as of now is higher by almost 2%, while silver has inched up 6%. But other than that, it is the commodity basket with respect to the crude that is trading absolutely flat. So no major movements when it comes to the crude oil prices. WTI posts a weekly gain amidst the West Asian tensions. But as of now, Brent crude is trading absolutely flat, while silver as well as gold, the run-up continues and both are trading at their all-time high levels.
All right, so that's how the commodity is shaping up. But let's move on to the biggest news that transpired. On the geopolitical front, the European Union is scrambling to avert the threatened tariff by Donald Trump linked to Greenland while preparing retaliation if the talks fail. EU leaders meet at an emergency summit on Thursday, weighing a 93 billion euro tariff package and even the bloc's unused anti-coercion instrument. Despite is to put into this, the World Economic Forum in Davos, where Trump will address the global leaders. However, Besson continued to warn that it was better for the US to make Greenland a part of the country amid the rising threats from Russia. Let's listen in.
The United States needs to be in control to prevent a war, and that we do not want to get dragged into someone else's war. The European leaders will come around and they will understand that they need to be under the U.S. security umbrella. What would happen in Ukraine that if the U.S. pulled its support out? The whole thing would collapse.
And U.S. Treasury Secretary Scott Bessent says that it is very unlikely that the U.S. Supreme Court will overturn President Trump's tariff imposed under the emergency powers, calling them the president's signature economic policy. Now, the court could rule as early as this week on the Trump's use of the emergency tariffs as Europe braces for fresh tariffs linked to the Greenland dispute.
And the Trump administration wants countries to pay $1 billion for permanent seats on a proposed Board of Peace, according to a draft charter. Trump would serve as the inaugural chairman with final approval powers. The board, endorsed by the United Nations Security Council, is meant to oversee the Israel-Hamas ceasefire and the Gaza's reconstruction, with funds earmarked for rebuilding efforts.
And Canada and China have struck an initial deal to slash the tariffs on electric vehicles and canola, marking a reset in the ties. Now, Prime Minister Mark Carney said that Canada will allow Chinese EV imports at a 6.1% tariff, sharply lower than the earlier 100% in return, wherein Beijing is expected to cut steep duties on Canadian canola.
And Iran's president warns any US strike would trigger a harsh response as nationwide protests have reportedly killed at least 5,000 people, including 500 security forces, in the deadliest unrest since 1979. Tehran hinted its judiciary may proceed with executions of detainees charged under severe laws.
And from the world's most powerful boardroom in the Alps, ET Now brings you in India and the world in conversation. Join us at Davos 2026 with global leaders, CEOs and policymakers shaping the next economic cycle. From Sir Martin Sorrell on the future of capitalism to Anisha, Girish Tanti and Nadir Godrej on growth, energy and global supply chains, with voices from finance, technology, sustainability and the government, including Ashwini Vaishnav and Smriti Irani. Stay tuned for exclusive conversation throughout the week.
And speaking of World Economic Forum that is underway in Davos, Times Network's Mihir Bhatt spoke with the World Economic Forum President and CEO Borj Brende on global growth, geopolitical, trade resilience and how the AI investment is shaping a cautiously optimistic economic outlook. Let's listen in.
Today, one of the challenges that any large global corporate is facing is they are continuously getting dragged into geoeconomics and geopolitics, and they have to shift their business strategy, they have to shift their supply lines. I mean, if you look at the count of number of corporates who have exited from China and vice versa, it's really a concern. So, I mean, what is your view on that as World Economic Forum?
We can look at it as glass half full or half empty. We were expecting much more of a slowing of the global growth than we have seen. This year we expect a little bit more than 3%. It's not like trend growth closer to 4% we had for decades, but with all the geopolitical turmoil, it's not bad. Trade used to be the engine of growth, and trade grew twice as much as the global growth. That, I think, is not happening in the years to come. But what we're seeing now, the trade is still growing. It's growing around 3%. So it's not stopping. So we are trading more with each other with respect this year than we did last year. So that is important to remind ourselves about. And secondly, on top of this, we have $1.5 trillion US being invested in AI last year. This will continue also this year. So a year ago, I would have been worried that we could see a decade of slow growth like in the 1970s. If there's no major wars and escalations with the new technologies, we could possibly also, if you want to look at the bright side of life, and that's also something we need to do, we can see decades of high growth because of the investments in the new technologies, increased productivity and all this. So I'm torn, but moving a bit more to the bullish side than the bearish side on the global economy.
Also listen in to what he had to say on the weaponization of trade tariff warfare and global trade fluctuations.
Are you concerned, Borje, about, for the lack of a better word, weaponization of trade or weaponization of tariff between countries? Are you concerned about that? Because it's in direct conflict with the spirit of globalization.
Since the start of the 1990s, we have had this globalization for 30 years. It doubled the global GDP. The extreme poverty in the world went from 40% to 10%. So it gave its benefits. But they also had challenges related to it. For example, many blue-collar workers in already industrialized countries and middle class got competition from emerging economies they didn't have before. You have to look at it in a broader historic context. Trade has always been fluctuating. We have been through a period of a lot of trade and opening of borders. Now we're in a different situation where also post-COVID, countries are not only thinking about just in time, but also just in case. So they're strengthening their supply chains. And then you have on top of it this friendshoring that some countries only want to then trade basically with what they define as friends. But that's also very complicated because, as I said, with US and China, they're already so interlinked. I think the same with the US and India are very interlinked. But that process of negotiations are still going on. And I thought by Davos that would have been solved. But let's see.
And well, with that, it's time for a quick breather. After the break, we'll get you more updates before the start of Indian markets. Stay tuned.